Economic data is moving the markets. That's our topic for today's Backstage Pass. This week's market theme has been largely European. We saw the ECB raise their equivalent of the Fed fund rate by 50 basis points, first time they've done that in 11 years. And then overnight, we had some data come out from the Eurozone showing some slowing down in their economy, PMI data that showed their economy slowing down a little bit, and the bond market really benefited from that data. Then when markets opened here in the United States, we had some weaker economic data that really sent the bonds into a rally, following up off of the Philly Fed Business Index that was released this week, also showing some slowdown in the economy. So globally, we're starting to see some slowdown, and really that the market's been pushed by the economic data coming out of the Eurozone. That said, mortgage bonds are up so far today, 27 basis points. 10-year yield is down 8 basis points. Mortgage rates opened up better today than where they closed off yesterday. The mortgage bonds are down off of their intraday highs, so the really aggressive lenders could be repricing for the worse. We don't expect to see a lot of that today, but could be a potential possibility. We'll let you know if that happens. Now, this week is kind of wrapped up as far as news goes, but next week, we got a full slate next week. We've got the Fed meeting. We fully expect the Fed to raise their fund rate by 75 basis points. We've got quarter two GDP that's coming out. That's expected to come in at a negative 1.6%. However, the final number won't come out until September, and that can be revised. And we also have PCE data. Now, PCE data in May came in at 6.3%. That was the headline. The core reading came in at 4.7%. In June, it's expected to spike up to 6.7%. So we're expecting to see the PCE data, that headline inflation reading, go up to 6.7%. This is the Fed's favorite reading on inflation. And so again, like we said, we're expecting the Fed to still raise the fund rate by 75 basis points, even though we're seeing some of this economic slowdown. Now, that hotter PCE data that we're expecting could put some pressure on the mortgage bonds, but remember, just a couple of weeks ago, we had CPI data that came out hotter, and the bond market already reacted to that. So the reaction to the PCE data may be kind of muted, just based on the fact that bonds have already reacted a little bit to the hotter CPI reading. We'll see how that happens as it unfolds. But listen, that's all we have for today. Hope you have a happy Friday. Have a great weekend. And remember, stay positive, and we'll see you on Monday.